Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, April the 13th. Well, let me start today saying that today is one of those days in which you don't believe anything in the markets. It's one of those days in which you think that this market is super rigged and there's no way we just move what we moved. And well, it is what it is, but certainly today is bad day for a lot of people and a very good day for another lot of people. The thing is that markets are always surprising yourself and sometimes go the other way. But what happened today is just unbelievable. We got PPI month over month way lower than expected. In the negative, we were expecting flat, and core PPI came also in the negative. Initial jobless claims higher and continuing jobless claims a little bit lower, but still lower than the previous one. And core PPI year over year was flat, and PPI year over year was way lower than before and slightly lower than expected. So overall, PPI is showing that inflation on the producer side is way lower and prices that are paying those producers, those businesses are way lower than expected. And this combined with the fact that yesterday we got slightly mixed CPI, but at least it was decent. I didn't like it, but today's PPI is showing that inflation is on its way down. But let me tell you, there's no way inflation is the focus right now. We are focusing on recession. And I think a lot of people is way leveraged to the short side. And this kind of news is a little bit counter movement. So let me explain myself. Yesterday, we got this big rejection on CPI. And I think I checked the open interest and there was an increase in open interest showing new shorts in this market. So the obvious thing is just to continue to the downside, even though the PPI is showing inflation is going down. I think inflation is not the focus, it's just the economy. And right now, there's no way that some stocks like Apple, that is right now, look at this, 3.17 on the day. There's no way these stocks can hold these levels, and the PE ratio that they have is like crazy. I think Apple PE ratio is like 36x. Tesla is also on the roof. Amazon is also on the roof. All tech is just in a price that it doesn't make any sense to buy it. Because sooner or later, I think more sooner than later, we are going to go down heavily. This was just show on CPI, and today doing this kind of B reversal and doing this thing on the daily, even though we are range bound, doing this V reversal is just insanely unfortunate. Because I think there's a lot of people playing options like again, they are gambling 0 DTE, and this is causing some very big players to just hedge themselves and making these kind of moves counterproductive and counter movement to the real fundamentals that we are showing. Fundamentals that are telling that gold is 1.40%, gold is going to be higher because it likes lower interest rates. And I think we are approaching that terminal rate that Fed is liking at 5.25%. I think this level is quite important. 2078 is quite level for gold, and I think it's just a magnet. And as long as interest rates, I mean, gold is already pricing in 25 basis points in 3rd of May, but as long as interest rates reach the terminal rate, I think gold is going to still be bullish. But it doesn't make sense that crude oil is at these levels. Remember that crude oil in 23 days gapped up 28%. And the CPI that we got is for this period. Right now, energy is higher. So what do you think new upcoming CPIs is are going to be? Well, unless the calculation is showing, yesterday, please check the video that I did. March, April, May, and June last year were insanely high regarding CPI. So as we move into those new months, CPI is going to naturally be lower because we are comparing towards those high CPIs. So as long as we continue moving towards and letting those months out of the calculation, CPI is going to be lower without inflation going down. And that's one trick, because it's year over year, that's one trick that inflationary naysayers are defending. And let me tell you, energy being this bullish is not good for the real practical world in which you go to the store, you want shopping, and you see eggs, milk, food, restaurant, and super high prices. Another thing that doesn't make any sense, banks are all in the green. Regional sectors 2%, and tomorrow, remember, we have JP Morgan. Before market open, we have earnings for JP Morgan, Wells Fargo, BlackRock, and Goldman Sachs is next week. So I think today is very dangerous if you think that economics is all good, all great, sunflowers, and all that. But let me tell you that that's not the case. This move is not natural. This move is just the consequence of big hedge funds being hedged against zero DTE options, and it doesn't make sense with comparing with other markets like dollar, yields going higher, inverted yield curve that is basically range bound. So there's no fundamental, in my opinion, that is justifying this huge move that we got on the Nasdaq 2%. That basically, if you check the 30-minute chart, it didn't do a lower low, not a single one candle. The 5-minute chart, let me tell you, this was a lower low, this was a lower low that got bought up, this was a lower low that got bought up, this was a lower low, a lot of bottoming tails. Big players, hedge funds, managers managing billions of dollars in portfolios are just buying because of nonsense. They are just being hedged against other markets that are following the recessionary path. And I think tomorrow is going to be a bloodbath. Remember what I'm saying. Tomorrow, banks are going to report bad and mixed earnings, and markets are not going to like it, because two things are what drives the market: value and expectations. Expectations tomorrow are going to be crashed, and value at these levels, once the recession hit and the Fed reach terminal rate, we are going to correct to lower values, because there's no way investors are buying up here. This is just an unnatural move that is being produced due to some internal hedge against some other markets that big players are saying. So I know what are you going to say. I was short and all that. I was trying to short, but once I saw this consolidation and look, this 5-minute chart, it's just super bullish out of nowhere. So I just took the loss and I just went to do some other things, some other businesses that I have. So I was short because for me, it was the logical move after yesterday's and given the fundamentals, because PPI being good is not the solution for our economy. It's not everything is good, everything is sunflower, blue sky. There's no way we are able to hold these levels. We are just jumping around based on what big hedge funds are willing to do with us, manipulating the price action due to some other assets in which they are insanely short. They are buying here. They are hedging against tomorrow, against recession, and sooner or later they will just jump, as they are already doing. They are just selling into these rips. Their net shorts are accumulating higher, so they are net short for the recession that is going to hit the US. I know that you gamblers, zero DTE options players are going to love these kind of things, but this is not the real economy. This is not sustainable. Sometimes I get caught on these kind of things, but I would like to explain my point of view and what is happening in the markets, because these kind of things are not healthy for the players being invested in the markets. And sooner or later, we are going to be destroyed. Retails are going to be destroyed. They don't like it today because we just out of nowhere, we were super bullish, 2% on the Nasdaq, the best day in 2 months. But there are other markets that are already playing price action like it should be played in this kind of context in the overall US economy. And I think that's my rant. That's the kind of video I was waiting for, to see if we just, I mean, 13,200 was just a magnet, and basically this is still in play. This 13,240, this was my first level to short, but I just don't want to short anything anymore today. I was trying to short up here at 13,100 in this yesterday's point, this pivot. I didn't like this due to this consolidation, and then at this point I was just, I don't care anymore. So, well, congratulations if you were long, but trust me, be really careful tomorrow. Be really careful next week, because US economy is going to enter in this is the calm before the storm. This is the big pump before the big dump, because it always happens whenever Fed reach terminal rates and they pause or even start cutting. The S&P 500, the market will see red after red after red. And big hedge funds are already accumulating net shorts in order to do that. These kind of things are consequence of hedges, big hedges against this kind of news. But remember, inflation is not the focus, it's the recession. And recession is around the corner. Remember that. Remember that. And I think that's all. That's my rant. That's my point of view into the market. That's what I would like to include in this video. And if you've reached this point, thank you. I appreciate your time as always. And if you like this video, I will really appreciate that. And if you subscribe to the channel to really support my effort on sharing my opinion, my ideas, and my strategies for the market, I would really appreciate that too. So remember that I upload every single day videos for market forecast, market updates, and market recaps. I appreciate your time. I hope this kind of day didn't destroy your account, and just take some rest and start fresh tomorrow. Each day, it's a new day. Be careful tomorrow, because we have retail sales also tomorrow, 1 hour before the market open, and at the same time, Fed is also speaking, and also we have earnings. JP Morgan Wells Fargo, BlackRock, and some others are reporting earnings before the market opens. So be really patient tomorrow. Don't hesitate if you think your setup is short. Don't be scared to go against this kind of thing, because this thing is not natural. This thing that just happened today is not the consequence of good fundamental. It's just the consequence of some technical hedged positions that big players are doing. Try not to gamble tomorrow into the Friday because you can just get demolished. Be careful tomorrow, and let's see if we can just have a nice price action day following fundamentals. That it's what I like. The 30-minute chart is showing still a lot of green. I mean, I think we are going to see a big spike because, I mean, why not, right? This pivot at 13,241 would be insane for all these people short to get squeezed. So that's all. Thank you for your time. Be disciplined, manage your risk tomorrow and every day, and you will be successful. Stay safe, everyone, and see you tomorrow.